Okay, we do have some new forms for 2021. The first new form is going to be that the 8915E that I just mentioned, which deals with the retirement distributions, that has been retired. That form has now been replaced. We're going to get a new form. That new form is 8915F, and this is going to be used for multiple years. Historically, the way the 8915 series has worked, it started in 2016 with 8915A, and taxpayers who got qualified distributions that met the requirements of that could then defer those over a 3-year period, and they would continue to report those for those 3 years on the 8915A. Then anybody who had a qualified distribution in 2017, they reported that on 8915B, and it continued on that way. The IRS has changed the way they want this reported. It's now going to be reported, these repayments are going to be reported on 8915F, and this will be multi-year. We will continue to use the 8915F for repaying 2020 coronavirus deferrals, and we'll do it this year and next year. Another thing is we've got these other major forms changes, and we've kind of talked about each of them already, in that you can see that these forms, so when you see these forms this year, you're going to see that there's a lot more to them, and that's because of these changes that have occurred. We do have some new forms. We have these 5 new forms that are going to be available this year. And these 5 new forms, I'm going to cover them briefly. The first one is Form 9000. And this Form 9000 it allows taxpayers to communicate with the IRS in an alternative medium. It allows them to use these different forms. It's becoming more common that you could have somebody who wants audio, braille, etc. So it allows for different things. This will be something you'll find in the tax programs. It's going to be under your personal information sections, but it will allow you the opportunity to select an alternative way to communicate this year. The next series of forms, the other 4 forms, all relate to the foreign tax credit. And believe it or not, the foreign tax credit is one of the largest non-refundable credits that contribute to the tax gap. And the tax gap is the money that the IRS thinks it should collect versus what it actually does collect. And this is very common, that there is this gap here, and it's in and one of it is the foreign tax credit. And the reason for it is that there are 4 tests that always have to be met in order to claim the foreign tax credit. And basically it has to be an income tax, it has to be an actual liability, it has to be imposed. But the last one is where most people have difficulty with it. It has to be owed and paid. It can't just be paid, it has to be owed. And that's where most folks get thrown off, is because where it's owed, it's based on what tax treaties may say. For example, the tax treaty may say that the amount of tax that you owe on dividends that are paid in the United Kingdom is 0%. However, the withholding may be a different amount. There may be taxes that were withheld. And what we do, a lot of preparers will do this, is they will claim the foreign tax credit because they had those funds withheld. Unfortunately, that money is not owed. And technically, you're not supposed to claim the credit. What you're supposed to do is get your money back from the foreign country. You're supposed to file for a refund in the foreign country. Well, obviously the small dollar taxpayers, the ones that have $300, $600 in foreign taxes paid, that's not what this is all about. But what it is about are large taxpayers that have large amounts. And the IRS has imposed a series of new forms that are all designed to capture that information on the amount of tax that is paid and owed. And so the first of these are going to be, we're going to see new schedules. They're going to be called Schedule K-2s. And you're going to see them both for partnerships, and you're going to see them for S corps. And these are very detailed, large forms. They're literally 19 pages to the K-2. And that K-2, it's going to be the partner share of distributive items, that are international, foreign items. So it's going to give you very detailed information on that information coming over from the partnership. And all of that information is designed for things that should go into the Form 1116, which is your foreign tax credit. So that's going to be your K-2. Your K-3 is dealing with similar items. It's also coming from a partnership. It's also coming from an S corp. And this details, again, a different type of activity that is being reported by that entity over. So we're going to start seeing, preparers should, we expect that you're going to start seeing some of these K-2s, K-3s coming in from taxpayers, source documents that they'll bring in when they are investing in these maybe large partnerships, particularly like publicly traded partnerships, et cetera. So we should start seeing some of these types of forms. The next thing is we're going to do, and this is obviously because it's tied in to these K-2s and K-3s, is we're seeing two new schedules added to Form 1116. The first one is your carryover reconciliation form, which is designed to report carryovers amounts that these entities will be paying into foreign countries, because they have certain amounts that maybe they accrue it, it's being carried over to the next year. The next form that we're going to see are redeterminations. And this is the form that we should get. This is when they file their foreign tax return and there is a different amount owed on that foreign tax return than what they paid in the previous on the previous schedule. So we're going to see these. This is going to create some confusion for all of us, but it is going to. These are the new forms that we're going to see. And with that, I thank you all for your patience. Hopefully, this is something that has been helpful to y'all. I know it's a lot of information to consume. That's why at TaxSlayer we do have our pro support division, and a phone number that you can call anytime. And thank you all.